Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. This is Quincy Krosby. It's The Talking Point, and this is Monday, December 2nd. It's a very busy week for the market. There's so much in terms of data, and also Chairman Powell is speaking on Wednesday. In terms of what the market wants to see, the market wants to see more clarity in terms of whether the Fed will cut rates on December 18th. They may get some of that clarity today, or market has to wait for more data regarding inflation. Although this week we will have data regarding inflation, and that will come from the ISM, Institute for Supply Management. These are the numbers that come from the service sector and the manufacturing sector. And as I always point out, they have a high positive correlation overall with the trend in the economy and the market. So what we're looking for overall is when we get the ISM, Institute for Supply Management, this is the purchasing managers, reports coming out this week on manufacturing. What we're looking for is, one, is the manufacturing sector bottoming. We'll keep talking about that. We have some strong numbers coming in terms of regional manufacturing, and then followed by a weak report. But overall, in terms of manufacturing, we're looking at new orders, we're looking at hiring expectations, and we are looking at the pricing component. That's going to tell us whether or not manufacturers are paying more, and are they trying to charge more for their products. So that's going to be important. You piece all of this together to give you an impression of inflation. And then you have also the service sector, which of course is the largest portion of the economy. And that is the ISM services is going to come out on Wednesday. Expectations are that it will be in positive territory, right? That's important. But again, we're looking for the pricing component. We're looking for new orders, and we are looking for employment expectations. So that's going to be important for the market. But also this week, we have, as I alluded to, Chairman Powell is going to be speaking on Wednesday. The market wants to see if there's anything that has not yet been assimilated by the market, meaning discounted. That's market terminology. That did we already heard everything? Or does he add any bit of information in his thinking regarding really what the market expects for December? Right now, the consensus for the Fed funds futures market is that the Fed about 65% positive on a rate cut in December. So despite so much information this week and actually moving into the actual meeting, that that will change up and down as we get closer to the middle of the month. Also this week, we have the Fed Beige book. And I always pay attention to it because during periods of transition, which is clearly what we're in now, we are looking for what do the various areas, territories, regions in the United States see regarding employment, regarding inflation. And this is important because the Fed Beige book, by the way, tends to be more up-to-date than even the data that we receive because, again, they put it together quickly, the Beige book, and more importantly, the market is going to be looking to see a trend. Is the trend positive? Is the trend negative? We will get that on Wednesday at 2 o'clock as we typically get the Beige book. But obviously, important for this week will be the unemployment report coming out on Friday. And here are the expectations. We call it consensus estimates. If you're watching business news this week, you'll hear that term over and over again, consensus estimates. That really is all of the analysts giving their view on it, their numbers, and then you get an estimate. The estimate is actually high. It's 200,000. But remember, because of the Boeing strike, because of the hurricanes, the last report that we had was 12,000. So we're going to see if there are any revisions there. keep in mind why revisions are so important. When you have revisions that are downward revisions, the market basically wonders whether or not the numbers that are given on the day of the employment report, which is a Friday, the first Friday of the month, whether or not that too will be revised downward. It presents a view of the employment landscape as perhaps, in the words of Chairman Powell, cooling at a faster pace. He has even said over and over again that if the labor market deteriorates at a faster clip, the Fed will come in and cut rates at a faster clip. So the market is very much attuned to what the labor market suggests, and also suggests for consumer spending. Consumer spending has been resilient. It's been solid. We're getting the reports from the credit card companies and from the retailers themselves. However, it is primarily coming from those with stronger incomes over $100,000, in the words of Walmart, suggesting that those who have come to the store initially to take advantage of lower food prices are now moving into the higher discretionary aisles, where obviously Walmart makes more money. But they said it's primarily coming from those who earn over $100,000 a year. People always ask, how does stores know that? It's the credit cards. They know everything about us. So always remember that. There are a lot of people who pay in cash just for that reason. So this is going to be extremely important as we go and head towards that December meeting for the Fed. Also, the expectations are that the unemployment remains at 4.1%. If that unemployment rate climbs higher, that's going to be a concern for the market, regardless of the reason. I know there are many who will say, well, we've got more workers coming in looking for jobs. Therefore, if they don't get the jobs, the unemployment rate rises. Nonetheless, if the unemployment rate rises above 4.1%, the market is going to be concerned about whether or not the labor market is, quote unquote, cooling at a faster clip. Also, in terms of hourly wages, expectations are that they come in a little bit. And even though workers are demanding higher wages, for the market, the concern is if higher wages continue, and here's the reasoning, that companies are going to try yet again to pass along higher prices to help pay and cover those higher wages. And that, of course, would be feeding inflation. So overall, right now, the market expects that the wage component will be a little bit cooler. We will have Fed speakers this week, but I think that obviously the most important is going to be Chairman Powell speaking at a conference in the middle of the week. In terms of the market itself, in terms of December tends to be a positive month for the market, especially if the market is coming in with months, November, for example, that are strong. And certainly November has been very strong for the market. In fact, you've seen the market broadening out. The market has been broadening out without the help of the big tech names. You could also argue that because the big tech names have not been, skyrocketing higher as they were expected to do, it allows the other sectors or the other components of the market to climb higher. So there's always this notion that when they're doing well, and that includes NVIDIA, when they're doing well, it takes kind of the oxygen out of the market. For those who follow the metrics in the market, the S&P 500, 77% of the S&P 500 is trading above its 200-day moving average. That is extremely important because it shows you that there is health in the inner workings of the market. You are looking, and we always pay attention to this, because if there's a sell-off, and by the way, it's very likely we will have a sell-off before we get to the middle to the end of the market, end of December. But what you're looking for is if that 200-day moving average moves below 65%, that's where you begin to worry about the health of the S&P 500. So we're going to be watching again. Is this morning's opening in the red? Is that going to continue? Is it going to lead to a sell-off? There's, so much, but much depends on those yields, the 10-year Treasury yields. The 10-year Treasury yields will be also factoring in all of the data that will come out this week and whether or not they see it as strong growth that could push the yields higher or inflationary. And needless to say, any of the leaks or comments coming out of the new administration could lead to the 10-year Treasury yield inching higher as expectations for higher inflation kick in. So there's an awful lot for the market to digest as we go into this first week of December. But again, keep in mind, statistically, it tends to bode well for the end of the year. Also, in closing, I want to add here something that's important about the workings in December. You also have active managers during the month of December who are lagging in performance, trying to catch up, and they almost become momentum. They go in on a momentum style, just grabbing what is climbing higher in order to help and underpin their end-of-the-year performance. Similarly, you will have managers locking in gains if they don't want to go to the end of December because they're worried about something, out of the ordinary or some shock coming, from what we call an exogenous shock hitting the market. They want to lock in those gains so that they have it. We keep our eye on that. Overall, in the month of December, too, volume tends to be a bit lower overall. And remember, when you have volume that eases a bit at any time, it can skew the market in one direction or the other when data comes out. In terms of earnings, we are almost to the end of the earnings cycle, but I'm going to be paying attention this week to Salesforce. I want to see what they have to say about artificial intelligence and what are they utilizing, what are they doing in terms of incorporating AI into their operating systems. So I think it's going to be important because remember one period that we saw Salesforce actually didn't do well, and it really helped push the Dow down. It's a member of the Dow. So, but I'm looking at it in terms of how are they going to utilize AI in terms of their operating systems, as I just said. So a lot for this market to absorb this week, but the market has been doing a good job of absorbing all of this information, data, commentary from the Fed, the dollar strengthening. Typically, the month of December, the dollar tends to weaken, but maybe not this year because of concerns over inflation coming in, perhaps from tariffs. So much for the market to absorb, but let's keep it simple. Chairman Powell is speaking, the data, important, and also any information coming in from the new administration that could add clarity for what the market is concerned about. Thank you so much. Have a very good week. We'll be back next week.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and is subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer. Member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of the LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.